Hey everyone, welcome back to the Mark Loeffler Experience. Friend of the show, Andrew Hines is back, and we're going to talk about
2022, what to watch out for, really, the signals, what's happening in the market now, but more importantly, what can we look out for, and that's going to affect us and be significant this coming year.
Yeah, because we did our 2022 predictions
last month.
Just to recap, market's going to go up.
Yeah, I mean, now this month, right, November, like Canada Housing Statistics, I forget the website, I was just on it earlier today. They were talking about how we're finally acknowledging that the market's heating back up. And surprise, surprise, it's not really a surprise to anyone who's paying attention. We have a supply chain issue. We're not getting as many new houses on the market right now, and people are fighting over what's left. And then, of course, we have the immigration coming in, too. So as long as they keep printing money, it's likely we're going to see these values keep going up because of that restricted supply. And that's sort of the case across the board. You look at the various different cities, and we're seeing the same thing. Yes, sales are down, but inventory's down even more when we're looking year over year. And
yeah, year over year months,
yeah.
right?
Like, yeah. If you're looking against last December, for instance, most cities you're going to see that we have less supply than we did last year.
For sure.
Yeah.
For sure.
So that's the common trend, right? And that's not surprising, right? We could make a whole episode digging into the micro on that, but we're really just kind of digging into what we know true at the macro level. So I thought it'd be cool, and I know we were talking about this before, if we just jumped right into what are the signals? What are we looking for next year to know if there's a problem?
What can derail the market?
Yeah.
Really, what's going to take this, or what could take this, and say, okay, Mark, Andrew, your predictions are all wrong, and this was the factor,
right? Because our predictions, like, there's so many things we're not in control of, right? Like, we can't decide what a certain politician will do or predict what they're going to wake up and, you know.
We can't predict we can predict how many times the Bank of Canada is going to raise interest rates because they tell us a lot, but if they go ahead and say, you know what, we changed policy, we're going to do 6 times next year.
You know what, though? Like, I worked in the mortgage industry from 2010 onward, and I just remember constantly, like, my entire time in the business, hearing interest rates are going up next year. Interest rates are going up next quarter. And then they reevaluate. They're like, well, economic growth just isn't strong enough right now. Now, granted, at that time, we never had the inflation we have now.
Or the Decepticon virus?
The Decepticon?
No, that's the new variant, isn't it?
Have you heard of when they rearranged the letters? Are we not allowed to say that here?
I don't know. I just call it the Decepticon one.
Yeah. But so that's one thing. But I mean, so if you start with the interest rates, the one thing we don't have is the economic growth to necessarily signal that you should be increasing interest rates, except we do have the inflation. So that's sort of what some people refer to as stagflation, and it's really not a great place to be. It's a dangerous place to be if they increase interest rates then.
Well, here's the thing. They're actually calling for inflation to basically come down a bit on its own because of that. Well, I mean, we were talking about it before, the supply chain.
Yeah.
So the supply chain is going to, at some point, get better.
Yeah, assuming this shipping
It can't get worse.
Can't?
I mean, can it?
Right now we're waiting like 6 months for a refrigerator.
Yeah, like I have a dishwasher on order since August.
Yeah.
And I still don't have it, so.
But that's something, to your point, that's something we could actually see housing prices come down over. If there was if supply cleared up enough, that new builders are pumping out, new product enough, it's going to open up the options for buyers. There's going to be less competing offers, and naturally the market will either go up slower or maybe even decrease in value, which would be enjoyable for buyers.
Well, I mean, there would have to be a lot of supply coming on the market.
Yeah, exactly. Highly unlikely. Yeah. So I don't really see that one as overly likely. The interest rates climbing, again, we've talked about all the negative implications. We're going to have obviously a decrease in economic growth if they increase interest rates, and then we also have government debt that's doubled, which needs to be serviced.
More than doubled, yeah.
Yeah, so it needs to be serviced, right? So now that's a burden on the taxpayers in multiple ways. So now they're paying more interest and they're going to pay more taxes.
I mean, do you think our current government actually cares?
I've said this. Like, I wouldn't trust these fools with the potato gun. I mean, the two of us are way more qualified, and I'm not tooting our own horns. That's actually not even saying very much.
That's fair.
But here we are. We're in this.
I mean,
situation.
I can light money on fire just like the best of them. Jeez, you should see my stock account lately.
Yeah, you were telling me that. So it's like you said. Do you think they care? Well, I mean, these are the people that shut down businesses, bankrupted people. I mean, they're too one-dimensional. They're not thinking macro, which makes it so concerning when we try and predict.
I honestly don't think that they don't care. I think they care. I don't think they understand.
Yeah, see, this is the incompetence thing. Yeah.
I don't think they really understand like interest on the debt. I don't think like this is I mean, what was it? Somebody asked in the question period. Great. Do you understand what happens to the debt of the nation at this point? I forget what the whole story about that, but I was
Pierre Polyev asked the finance committee. He asked them what would happen, what would the effect on Canada be if interest rates went up 1%, and the entire room was silent. They were talking about a bill and how they wanted to spend.
Yeah.
They had like $7 billion they wanted to spend, and not one person in the room could answer what would happen if you had $7 billion and then have their interest rates go up 1%.
Yeah.
And that just goes to show the level of ignorance, right? This is like back of the envelope common sense stuff that they don't even do, and this is where
Well, you say common sense, but it's really not that common.
Well,
like most
it
people
becomes a lot more
it.
common when it's your own money. But when you're spending other people's money, common sense isn't needed.
That's fair.
Yeah, that's really what it comes down to. So if we're trying to get back to like what do we do with this information, assume fools are at the wheel.
Yeah.
And bad decisions are going to happen. So will they raise interest rates? It's very much a possibility because they don't understand, because they don't or care, one or the other.
Well, I mean, I think that economic growth the economy is going to grow next year.
Okay.
Right? With inflation and everything.
Absolutely. Inflation adjusted, if you're being true about the number, I think there's a good argument that it wouldn't. But yes, I do see your point.
Yeah. So they are going to raise interest rates a couple times next year.
Okay.
Well, I mean, it's probably one or two. Two probably.
Okay.
Is probable. I think anything more, right, could derail the market, because it's going to scare the market, but that's not their business. Their business is to tell you exactly what they're going to do a year ahead of time, so that when they do it, they don't spook the market.
Right, and I just going back to my point before, I've been through this many times where they've said we are going to increase interest rates at this time and don't. So both are possible.
Yeah,
both are very possible. I'd say we're about 50-50. That's my prediction. 50-50
that maybe not.
So we see an increase next year.
Yeah. Well, and I mean, obviously, the Bank of Canada doesn't that's not the long term fixed interest rates. That's just the variable rate, right? So, bond rates are based on the market, and
unless they're doing tactics like economic easing,
Well, they're buying bonds, basically.
Yeah, buying up their own bonds and basically creating a spread. To lower interest rates. It's absolutely insane when you dig into what they're actually doing.
Well, I mean, they just learned from the U.S. in the 2008 crisis, right? So, 2009. All right, so supply chain. So all the containers get unloaded.
Yeah.
There's stuff to build with. There's appliances. There's everything, and that could cause a spike in inventory on the market. Number two is interest rates. They just go willy-nilly, and they go from, 0.5% or 0.25% to 2% overnight. Or the fixed rates double seemingly or somehow. Right. Okay. What else could cause the market to crash next year?
Yeah, is there a crash potential? And I think it's highly unlikely. But there would have to be, we go back to that significant event, a really intense crash in the stock market that caused people to basically be scared about their financial future. You need an event like that where people tighten up the purse strings and now they stop spending. Stop in spending could really drive that. People just go move in with their parents and really try and save money. I don't know what event would cause that, but I mean, I guess no one except Michael Burry really. I mean, there were a handful of people predicted what happened in 2007, 2008.
Yeah.
So that one's anyone's guess as to what that next big catalyst event would be. It could be related to the next, Megatron variant, whatever comes next. If we were to shut down again, Mark, what do you see the effect of that being?
I mean, when we shut down, people don't spend money.
But then they keep giving people money. So then when they open back up, now all of a sudden you have all this money that's pent up that wants to spend, and it drives prices even further.
I don't think we shut down again. If we shut down again, I might go postal.
Yeah, well,
or just move
the head of the science table just said that he wants to go down to 25% capacities, and people should just get over it. He's a real peach, when he speaks. Real compassion in that.
Science and business, there's a fine balance there.
Different tangent we could go down there.
Yeah, we're not going to go down that tangent. We're not. It's not. It's honestly, at this point, it's not worth it.
No, it's not. So, I mean, it's the problem Canada faces, right? We're in a country where we set the precedent where the government can basically dictate, and we're kind of just on the ride. So what do you do? I mean, we've looked at the different variables here. Is that event likely? I don't know. And like you said, even if we do shut down, people stop spending or slow down their spending.
Yeah, I mean, you look at it last time. I mean, so we had that 1 month, and then the stock market started to rebound, and they're like, oh, I still have my job. I still have income, and look, interest rates are super low.
Yeah,
let's go buy a house.
It's almost like people took that extra money that they might have been spending on dinners out and movie theaters and whatever, and put that into housing, like we've talked about before.
Yeah, I'm not spending $50,000 on a vacation this year or whatever, and I know I'm going to get comments down below because of $50,000 vacation. I don't know. I don't take $50,000 vacation, but those guys went ahead and bought cottages, right?
Yeah.
People who traveled a lot, they went ahead and got, okay, I'm going to go get a secondary, like a recreational property, and that's,
It's been really good for Ontario Airbnbs. Looking forward to seeing that benefit continue in the near future.
Okay, supply chain, interest rates.
An unknown event, a black horse event, as Quentin calls it.
Yeah.
Yeah. Or dark horse?
Dark horse event.
Yeah.
That's going to destabilize the current market.
Yeah, it's all emotionally driven, right? It's people's emotions and fears, right? When the first lockdown happened, it was fear of the unknown. That's why it's spending completely constricted until 1 month later, where people are like, okay, well,
I still have a job.
Yeah, it's just still
and
moving
if I
on.
don't, the government's give me free money.
Right. So that effect, that 1 month, that April effect that we saw in 2020, it'll be a question of if that were to repeat and how long it would happen. That could be a correction. But I mean, the way I look at it, I mean, from an investor standpoint, and even if I was just a homeowner, I'd be probably thinking, okay, let's make sure I have some extra money available. And if that crash happens, great time to buy a second home.
Yep.
And if I'm an investor, even if I'm negative equity on several properties or even most of my portfolio, great time to buy a home.
Yeah. And as long as you're buying for cash flow, we said it all the time.
Yeah.
Like my properties I'm buying out in Edmonton, I'm buying a 6% cap, and I literally have a 1.5% mortgage on there, 35-year amortization.
Oh yeah, that's
like it's a no-brainer, right?
35. Where are you getting 35?
CMHC finance.
Oh, okay.
85% loan to purchase.
Yeah, but that takes time. Oh, so you're refinancing with the CMHC?
Yeah.
Okay, gotcha. That's another episode you'll have to do so we can all get caught up.
I'm going to do it. We're just going through the refinance process on the first one right now.
Yeah.
So once that's done, I'll put it out there.
Awesome. Yeah. Okay, Mark. So we got the big factors, I think. Is there anything else we're missing?
I don't know. Comment down below. What are we missing? We're reasonably intelligent human beings. At least Andrew is. What are we missing? Like what could cause this? I mean, interest rates, dark horse event, the new Megatron virus, whatever coming. What's going to cause this? Supply chain. They finally figure out how to get all those ships unloaded, and we get everything. Even then, I don't I don't know that's going to cause a spike in house price or house building, but what could cause it? Comment. Let us know, and then we can discuss this next time we get together. Any last comments for the people?
Yeah, it was just
YouTube.
As we were thinking, I was thinking of other possible ways, like policies, immigration, to bring in good skilled labor. Maybe if we get a move towards really pushing good skilled labor, open up and sort of planning. Like if for some reason these cities get a little easier to deal with on a planning front, but you still need people to build them.
It's funny.
Materials.
We were talking about that Toronto. There's a 7-story apartment building, has 120 or so units. The person wants to put a 25-story building on it, so densify. It's a 1950s apartment, right? It's coming to the end of economic life anyways. I mean, you can obviously prove that. And he's like, okay, well, those 120 people who are there, I will let them rent at the same price in the new building. But, I mean, there's obviously a hassle.
Oh, yeah, most of them won't come back. A year and a half? 2 years to build
more,
Probably maybe even 3, yeah.
2 years, let's call it 2 years, And maybe they will, maybe they won't. But he's like, you know what? They're perfectly willing to do that. And, and then so they're going to take 120 units and turn that into triple or quadruple that, right? That's what we need. We need to densify on those land. But I mean, it's, obviously the residents aren't happy, and the surrounding people are, a lot of NIMBYism.
I see both sides of it. I really do. If I lived in that little corridor, and I wouldn't really want it being, hugely intensified. But I don't think we're meant to live on top of each other like that. Different discussion, obviously. But of course, if we're going to continue in the existing model and keep bringing people into Canada this way, the intensity is going to have to come.
Yeah.
And so, yeah, that's one of the problems. These politicians will say, hey, we're going to dedicate money to, affordable housing. Meanwhile, if you just allowed private investors to do their thing, it'd be far more effective. So that's one of those things. If that factor, if governments actually start, putting their money where their mouths are and letting investors build and intensify, then we could see this change. But I just don't see it happening to that significant degree.
And not overnight.
And not overnight, yeah. So is that going to affect 2022? I don't think so.
Yeah.
Anyway, I think that probably covers the bulk of it.
All right, everyone. Thanks so much for joining us again. We hope you had a very happy and prosperous 2021, and we wish you all the best for 2022. Definitely like, subscribe, comment down below. Happy holidays, Merry Christmas, Happy New Year, everybody.